Welcome to the Deep Dive, the only place you need to be to quickly synthesize complex reports. Today, we are undertaking a deep dive into the latest financials and strategy for ITC Hotels Limited. We're looking specifically at their Q2 and half-year results for the period ending September 30, 2025. Yeah, we're pulling directly from their official releases, the media statement and presentation dated October 24, 2025. Our mission really is to cut through all the data and figure out how this, premium hospitality giant is managing. How are they not just surviving, but actually thriving, even with some pretty significant seasonal headwinds?
Oh, absolutely. And those headwinds were definitely real this quarter. We're looking at a challenging operating environment, no doubt. Two main factors sort of dampened expectations in Q2. First, you had those heavy monsoon rains pretty much through July and August, and that always slows down leisure travel, corporate travel too sometimes. Just makes getting around harder.
Right, that's the classic seasonal slump we often see. But there was another issue too, wasn't there? Something more specific hitting profitability?
That's right. The calendar itself was kind of working against them this time. Q2 just had fewer auspicious wedding dates compared to usual. And since weddings, the banquets and all that are incredibly lucrative for hotels like these, well, that calendar constraint directly hit their high-margin F&B revenue.
Okay, so external factors pushing against both how many rooms they could fill and how much they made per event. So, given that whole setup, the main headline is, well, it's pretty extraordinary actually. The company achieved its highest ever Q2 revenue and profits. This resilience, particularly that huge jump in profit, that's what we really need to unpack first, I think.
Let's definitely start there. If we look at the hard numbers for Q2 FY26, consolidated revenue from operations, it was solid. Came in at 839 crores. That's an 8% increase compared to last year. Then there's EBITDA earnings before interest, taxes, depreciation, and amortization, basically, a measure of their operational profitability. That hit 246 crores, which is up 16%.
16% EBITDA growth? That's impressive. Shows strong operating leverage, right? But hang on, if you look further down the income statement, the pay profit after tax, that really jumped. It soared to 133 crores. That's a massive 74% increase.
74%, yeah, that's an outlier, even for a growing company. And what's really fascinating here is that gap, between the 16% EBITDA growth and that huge 74% pay-to growth. It suggests not just phenomenal operational efficiency, but maybe lower costs below that EBITDA line as well. Things like lower finance costs, maybe different tax expenses compared to Q2 last year. Those things magnified the already strong operating results.
That kind of leveraged profit growth is, well, it's a serious takeaway for sure. And looking at the first half overall, H1 FY26, the momentum seems undeniable. Consolidated total income at 145 crores, up 17% for the half year.
Hmm. And this stellar performance, it isn't happening in a vacuum. It's definitely anchored by the broader macroeconomic picture in India, which, remained pretty resilient, especially compared to some global slowdowns. We saw headline inflation moderate nicely, down about 1.5% in September.
And the Reserve Bank of India seem to agree, right? They actually revised their growth estimates for the fiscal year upward, bumped it up from 6.5% to 6.8%. A stable, expanding economy like that, it's foundational for premium travel demand.
Exactly. And if we connect this to the bigger picture for the hospitality sector itself, the source material highlights a really crucial structural tailwind. Basically, the supply-demand mismatch in premium Indian hospitality. It looks like it's going to persist, medium to long term. Demand, particularly in luxury and upscale leisure, is just growing faster than the available room inventory. And this structural shortage, well, it gives established premium players like ITC hotels significant pricing power.
Right, that pricing power is the engine. Okay, but let's drill down into the operations a bit more. How did they actually translate that structural advantage into, heads and beds? What were the key operational metrics driving that profit?
Yeah, operational excellence was clearly key. Their average daily rate, or ADR, that grew by 6%, and occupancy expanded too by 254 basis points.
Okay, hold on a sec. For listeners maybe not glued to investor decks every day, 254 basis points. What's that in, simple percentage terms?
Oh, right. Yes, 2.54 percentage points.
Okay.
So their overall occupancy rate went up by 2.54 percentage points. And when you combine that 6% rate growth with that bump in occupancy, you get to the really critical metric, RevPR, revenue per available room.
Ah, RevPR. And that's where their premium edge really came through, didn't it?
Precisely. Their standalone RevPR growth, it's just their own directly managed properties, was 9%. But the consolidated RevPAR growth, including managed properties, hit double digits, 11%. But here's the stat that really jumps out. I think it's maybe the most powerful nugget in the whole report. It really reflects their brand strength. The company commanded a 40% RevPR premium over the industry. That's specifically for their domestic-owned hotels in the luxury, upper upscale, and upscale segments.
40%. Wow,
Yes.
that's phenomenal. That doesn't just mean they charge a bit more. It means like 40% more financial firepower for every single room they have available compared to their main competitors. That's a really powerful moat, isn't it?
It absolutely is. It reflects superior product, consistent service, the whole package. And they maintain excellence in F&B too, remember. Despite those fewer wedding dates we talked about, F&B revenue still grew 5%. And importantly, it maintained a strong 10% two-year compound annual growth rate, so the underlying trend is still very positive.
Right. Food and beverage is such a core part of their brand heritage. Any specific examples that highlight their continued dominance there?
Yeah, their culinary reputation keeps getting international recognition. Three of their flagship restaurants, Avartana down in Chennai, and the legendary Bukhara and Dhumpuk in New Delhi, they all picked up top honors at the Condé Nast Traveler Top 50 Restaurants Awards just this quarter. And they're not just resting on laurels, they're also refreshing concepts, like the relaunch of Edo at ITC Gardenia shows they're continuously investing in the product.
Okay, so exceptional profit delivery today. But let's shift gears and look forward a bit. The company's future blueprint seems heavily built around expansion, specifically what they call their asset-right strategy. We hear that term asset-right quite a bit these days. Can you break down what it actually means for their growth model?
Sure, asset right essentially marks a pivot, moving away from primarily owning the physical hotel buildings themselves towards managing more hotels under contract for other owners. It means they can achieve growth that's much more capital efficient. It minimizes the need for huge upfront investments in real estate, you see. And their targets reflect this shift. They're aiming for over 220 operational hotels, more than 20,000 keys by 2030. But the key part is the plan mix. They want about 67% of that portfolio to be managed properties. That strategic shift towards managed properties, that's the core of asset right.
That makes a lot of sense. It lets them scale up their brand presence much faster without tying up massive amounts of capital in bricks and mortar. And speaking of scaling rapidly, probably the most exciting strategic update this quarter has to be the launch of that new premium brand.
Absolutely, that was big news. They unveiled the Epic Collection member ITC Hotels Group. And this new brand is explicitly designed to accelerate their premiumization journey. How? By targeting the conversion of high-quality, existing independent hotels. So instead of always building new properties from the ground up, they can bring existing high-end hotels under their operational umbrella, their loyalty program, and so on.
Interesting. A conversion play. Where are they planning to debut this new collection?
The initial destinations seem very focused, strategically chosen. Puri in Odisha is slated for an owned property, about 118 keys. And Tirupati in Andhra Pradesh will be a managed property with around 201 keys. Both of those are expected to open within the next couple of years. And the medium-term goal, they stated, is to add roughly 1,000 keys under this new Epic Collection banner.
So that's a clearly defined growth driver. And we saw evidence that this broader expansion strategy is already gaining traction, right? With strong signings in the first half of the year.
Yes, exactly. They reported 15 new signings just in H1 FY26. That accounts for about 1,500 keys. And it demonstrates a real geographic expansion push into key markets. Examples include their entry into Kerala with a Fortune hotel in Kochi, and significantly a new luxury ITC hotel brand signing in Patna, Bihar. That's a region really poised for significant economic development.
Okay, before we wrap up with what might be their biggest differentiator, let's quickly glance beyond India. Their first international property, ITC Ratnadipa in Colombo, Sri Lanka, launched back in April 2024. How's that performing on the global stage?
Actually, really well. ITC Ratnadipa has apparently sustained market leadership in RevPAR within Colombo, which is, a major achievement for a brand new property entering a competitive market. And perhaps more importantly, financially, it turned EBITDA positive in Q2 FY26, just its second full quarter of operation. Now, this success is definitely helped by the resurgence of Sri Lanka's tourism sector overall. Foreign tourist arrivals there surpassed 1.73 million just in the first 9 months of 2025.
That's a fantastic operational success story internationally. Great timing, it seems. And that leads us perfectly into the final segment, I think. If they're succeeding globally, they need a global standard to match. This company has always focused on what they call responsible luxury. Is that just clever marketing, or is there deep operational commitment behind it?
Oh, it's definitely deep operational commitment. And you could argue it's perhaps their biggest competitive differentiator worldwide.
Mm.
Their sustainability credentials are, frankly, unmatched globally in the hotel industry. For example, they just commissioned a large 3.3 milliW windmill in Gujarat. That alone boosts their renewable electricity share to over 54% of their total consumption. Think about that, over half from renewables.
Wow. And the third-party certifications seem to confirm they're setting a global standard, right?
Absolutely. Look, the ITC Grand Chola in Chennai was ranked the #1 sustainable hotel globally by Sustainability magazine. That's huge. And then look at their LEED certification numbers. They have 23 hotels holding LEED Platinum status, which is already top tier. But crucially, they're the first hotel chain in the world to achieve the most stringent certifications. LEED Zero Carbon, which 12 of their hotels have, and LEED Zero Water, which 9 hotels have achieved. They aren't just talking about reducing environmental impact. They're actively achieving net neutrality in core resource consumption like carbon and water. It's quite remarkable.
Okay, so let's try to synthesize this for you, our listener. This quarter, ITC hotels showed exceptional resilience, delivering, what was it, a 74% jump in PAT,
Done.
despite some really tough seasonal conditions. And they pulled this off by leveraging that massive 40% rev pair premium over the industry, reflecting genuine pricing power and brand strength. And the key takeaway here isn't just the impressive numbers themselves, it's the underlying strategy. They're clearly fueling future growth through that capital-efficient asset-right model. That's being accelerated now by the new Epic Collection premium conversion brand. And critically, this entire expansion plan is underpinned by that deep, verifiable commitment to world-leading sustainability standards, which acts as both, an ethical imperative for them, but also a powerful brand differentiator in today's market.
Which brings us to an important question, something for you to mull over. Given that structural advantage, we discussed the persistent supply-demand mismatch in premium hospitality. And at the same time, the increasing consumer preference, maybe even demand, for environmentally responsible brands. Is this simultaneous focus achieving that massive 40% RevP pair premium and maintaining global supremacy in net zero sustainability certifications? Is that the ultimate sort of dual-engine model for future-proofing growth in the high-end global tourism sector? Something for you to consider until our next deep dive.